I am Professor Omkar Sobalkar. I am going to teach you about basics of GST, which is the drastic change in indirect tax structure in India. What is GST? GST means Goods and Service Tax, which has a feature of one nation, one tax. It is basically a destination-based tax, means where the supply of goods or services goes, the destination of that goods and service will be taxable region. Whether it is taxable, then GST will be levied. Whether it is not taxable region, that is exempt from GST regime, then the tax would not be levied. It is a biggest tax reform as well as business reform. Original idea was placed by the Congress government in 2006. Proposed implementation was 2010, but finally implemented by Modi government, that is with effect from 1st July 2017. The appointment day is the term which is mentioned in the GST Act. The appointment day means the day on which GST Act has been applied all over the country. That is 1st July 2017, the midnight of GST launch. This is somewhat a GST working. We can go through this table, rows and columns. The columns giving description about the manufacturer, whether the dealer is distributor, whether dealer is wholesaler, retailer, and finally consumer. Purchase of inputs, supply value, value addition, GST rate, 20% GST payable, output tax, input tax credit, net GST payable. First row, manufacturer. If manufacturer purchase the value of inputs for rupees 100, that is his raw material, and he is supplying those goods, means he's selling those goods after processing or directly with profit margin of rupees 20, that is 120. Value addition, that is profit margin is 20. GST rate at the rate of 20%, we have assumed here at 20%. GST will be on the profit margin, that is 0.2. The per GST payable output tax is 24. 24 means the supply value 120 multiplied by GST tax rate, that is called as output tax payable, that is 24. Input tax credit which is available from inputs, that is inputs value of purchase is 100. On that 100, 20% GST, that is 20 rupees. Net GST payable, that is output tax payable 24 minus input tax credit available for a manufacturer, and net GST payable rupees 4. Again, distributor purchases the goods from manufacturer for his selling price, that is 120. Again, his profit margin is added of rupees 30 and supply value becomes 150. GST rate at the rate of 20% on output value, that is 150 for distributor. 150 multiplied by 20%, GST output tax payable is 30. Input tax rate available again from input of distributor, that is sale of manufacturer, selling price of manufacturer become input for distributor, that is rupees 120 multiplied by again GST rate 20%, which is comes to 24. Net GST payable for the distributor is output tax payable minus input tax credit available, that is 30 minus 24, that is 6 rupees, is going to pay distributor to government from his pocket. That is like that the wholesaler, retailer, and again finally consumer pays the GST. These are the shortcomings of existing law. Compliance was high due to such tremendous tax structure, complicated tax structure, excise tax, service tax, VAT, CST, entry tax, octroi, circumvented duty, counter value added duty, purchase tax, entertainment tax, luxury tax, etc. Admin cost, of course, was high due to this department structure and state-wise structure, district-wise structure, and administrative work was very, very much complexity. Again, due to these many of taxes in indirect structure, businessmen always confuse how to pay tax, when to pay tax, and he get confused and in maybe by mistake or by you can say by intentionally he evade the taxes. Interpretation of laws, various goods and service tax, got entry tax, outright, very much complicated language were used, and interpretation was again the issue by many tax practitioners as well as government as well as departmental authorities. Tax evasion was there and corruption. Input tax rate will be available in case of GST. Whether you purchase goods or services, the input tax credit, that is tax paid on your inputs of goods or service, whichever it may be, you can set off with any goods and services which are you are selling by this output tax payable. But before that, CST excise service tax are not allowed against the VAT. That is, services were paid by service tax paid on services, input of services, which is not allowed against paying of VAT on selling of goods. Benefit for citizens of GST: simpler tax system, reduction in prices of goods and services due to elimination of cascading, uniform prices throughout the country, transparency in taxation system, increase in employment opportunities. Benefit for trade and industry: again, reduction in multiplicity of confusion of many taxes, mitigation of cascading double taxation, mostly in cases of you can say builder or construction works, which is always a controversial issue. Now also in GST, somewhat controversial issues are there. More efficient neutralization of taxes, especially for export, development of common national market, simpler tax regime, fewer rates and exemption. 5 acts has been decided by the government. 5 acts in GST Act, the Central Goods and Service Tax Act, Integrated Goods and Service Tax Act, which is applicable integrally on state as well as central. Union Territory Goods Act is applicable for basically for union territories. Goods and Service Tax state compensation, that is you can say a centralized act, Central Goods and Service Tax, a state compensation, the agreement between state and central. The state goods and service tax, which is called as SGST. The state-wise taxes acts are different. Types of taxation in GST.